October, November 22, paper 23. Sum of incomplete records. Can you please read?
Reece, a sole trader, does not maintain a set of accounting records. He has provided the following information. So I read the question first, or should I read the adjustments?
Okay, first we want to calculate the total credit sales, total credit purchases, total cash paid, and depreciation charge. Are you with me?
Yeah.
To find out credit sales, what is the account that we require to make?
The SLCA.
SLCA. To find out credit purchases, what is the account that we have to make?
PLCA.
PLCA. Very good. To find out cash paid, what is the account that we have to make?
Cash account.
Cash account. And depreciation charge is a separate working itself. Okay. So I will make an SLC over here. I will make a PLC over here. Cash account here. Are you with me?
Yeah.
Okay, fine. So after reading the question, I will go back to read my question so I can extract information. Are you with me?
Yeah.
Okay, just a minute. Come on. I have cash account opening balance. Can you tell me opening and closing balance? Can you tell me where will it go?
In the cash account, balance begin down on the debit side,
Hmm.
which will be 240.
Okay, sorry, my bad. Opening balance is 240
And closing balance is 110.
and closing balance is 100. Okay. Electricity accrued, outstanding. Will
There's
it
no
come
account.
in any of the four accounts?
No.
Okay. Outstanding at the beginning of the year, what do we do?
Outstanding at the
Outstanding of the current year, we will add, and of the last year, you will subtract.
yeah. So at the beginning of the year, you will subtract it.
Of the current year. This is the current year and this is the last year.
Hmm.
Probably we are asked to make the income statement. Yes, we're asked to make the income statement as well. Are you with me?
Yes, miss.
Opening and closing inventory will be used to find out what?
The cost of sales.
Okay. Machinery. You have the opening value of the machinery.
Yeah, the cost of it.
You have the accumulated depreciation. I'm just noting it because I don't know the method of depreciation right now.
Yeah.
Rent paid in advance. Prepaid.
Prepaid. So at the beginning of the year, it will be
For the
added.
current year, it is minus, and for
Yeah,
the
and
last year, it is add.
yeah.
Okay. Now go for trade payables, opening and closing balance.
Yeah, that will come in the PLC.
Opening on which side?
Opening on credit side,
Closing on
debit side.
trade receivables, opening and closing balance.
Hmm.
Come on, tell me.
So on the debit side, 23,580 as
Opening
the balance
balance.
beginner and
Yeah,
closing balance as 20,620.
very good. Now I'm checking my receipts side. Okay. Are you with me?
Yeah,
Now this is the bank account summary. That means this is bank account and this is cash account that we are making.
yeah.
There is a difference between bank account and cash account. Do you know
Hmm.
that?
Yeah.
Okay, come on. Bank account receipt side, what does that denote?
Whatever comes in,
Bank account payment side, what does that denote?
whatever goes out.
Okay. Customers, credit customer, whatever is coming in, what does this mean?
That will go on the bank. You'll write it as bank on the credit side of the SLCA.
Okay. That means you have received this money from the customers. Money received from the customers comes over here 149,810.
Yeah.
If you don't understand it that way, if it is debit over here, it will go somewhere on the credit.
Hmm.
And if it is credit over here, it will go somewhere on the debit. Are you with me?
Yeah.
Okay, fine. Now what is this?
Cash sales banked.
Okay, that means we have two types of sales.
Hmm.
One is
Credit
with sales, one is the credit sales, other is with sales.
the cash sales.
Credit sales, we will prepare SLCA, and cash sales, we just have to total.
Yeah.
Now I'm seeing over here total cash sales for the year is 15,280.
Hmm.
So can you give me total cash sales?
Wait. 15,280 plus 710.
Yes. So my total cash sales would be 15,280 plus 7,170. So I know I have to make an income statement as well.
Yeah, so that'll be 22,450.
Income statement starts with revenue, and I know I have two types of revenue. One is cash sales,
Hmm.
one is credit sales. You can always show this as separate working also, and you can just calculate it in your workings. It's okay. But I think the space for income statement is very small.
Hmm. So
I'll put it over here in the working.
but miss total cash sales for the year 15,280, doesn't that include the 7,170 that was like banked?
Sorry?
15,280, the total cash sales for the year, doesn't that include the amount that is banked 7,170?
Yes, very good. I was expecting this from you. So your total cash sales for the year is 15,280. It includes this 7,170 because they have not told us that anything is missing.
Yeah.
Okay, so your cash sales is 15,280. Now you have to find your credit sales.
Yeah.
Can you find out credit sales? In SLCA, credit sales will come on which side?
Credit sales will come on the debit side.
Can you just scroll through and see if there is any information related to the credit sales?
No, there's nothing else. Yeah, there's nothing else. Acha, no, there's nothing.
Hmm?
There's nothing, no?
Nothing. So can you find the credit sales for me?
Yeah, what's that? 146,850.
146,850.
Hmm.
So the credit sales is 146,850. So can we get our total sales now?
Yeah.
Can you give me the total of this?
Total is what's it? 170,430.
Okay. So my revenue credit sales is 146,850. So my total revenue, cash revenue will be how much?
146,850 plus 15,280. Will be 162,130.
162,130.
Yeah.
So my total revenue is 162,130.
Hmm.
Then revenue less what you write?
Cost of sales.
Cost of sales is made up of
Opening inventory, purchases, minus
stock over.
carriage. Yeah, you'll have to add this thing also, carriage inwards.
Okay. So my cash sales is done.
Hmm.
Okay. Now I will read my payment side. Okay. Before going to anything.
Yeah.
Okay. Credit suppliers. Where will this go?
It will go in the PLCL on
Debit side.
the debit side. Yeah.
Okay. Because you paid them.
Yeah.
80, 140. When I was scrolling through, I did not find any other information that is related to this. So credit purchases will be my balancing figure.
Okay. It is 82,375.
82,375. So I've got my credit purchases also.
Yeah.
Please see that you make your working small because it's just for 2 marks 1 month. Okay.
Yeah.
Okay. Rent paid is other expenses. Wages is
Other expenses, electricity,
electricity.
other expenses,
General expenses.
other expenses.
Okay. So there is a purchase of new machinery and there is a sale of new machinery. Are you with me?
Yeah.
This will be the selling price and this will be the cost price. Are you with me?
Yeah.
Now you have depreciation charge for the machinery and cash paid for wages. Are you with me?
Yeah.
Okay, fine. Read the second adjustment.
Reece had also paid cash for wages during the year but had not recorded this.
Tell me, what do you understand by this?
That the cash account didn't amount for the wages that were paid.
So that means,
That the wages will be the balancing figure.
okay, fine. Come on, read ahead.
Okay. Reese took $450 per month drawings before the cash sales were banked. He had also taken goods for his own use with a selling price of $350 after a markup of 25%.
Okay. So the total cash sales is 15 to 80. Okay. And the cash sales were banked.
Yeah.
So Reese took 450 per month
So
before
it'll
the
be
cash sales were banked.
hmm,
So 450 into 12 is how much?
5,400.
Hmm?
5,400.
5,400.
Hmm.
So what should go into the bank?
5,400 will go as drawings on the credit side.
Drawings of what?
Sorry, drawings
So that means whatever cash sales you have, which side you will write?
on the debit side.
But cash sales were banked, right?
Huh.
So
Oh,
cash,
cash sales are banked. So you'll put
okay.
it on the credit side. Yeah, you'll put it on the credit side.
Sorry?
You'll put it on the credit side. 7170 on the credit side.
What is 7170?
It is
This
the
is
cash sales
bank
are
account
banked.
and this is the cash account.
Yeah, so cash sales are being banked. So cash is going out. So it'll go on the credit side, na 7170.
Okay, 7170 cash is going.
Yeah.
This is contra. What have you received in cash?
The sales 15 to 80.
Hmm. You received the sales, you put 7170 in the bank. Then what?
Mm, The drawings
Drawings, how much?
5,400 on the credit side.
Okay. What
Then
else?
you don't have to put all that wages and everything in the um this thing,
Which thing?
general expenses and electricity and all. Oh no, that's in the
Sorry.
bank account. I thought you were supposed to put general expenses on also, but that's in the bank account, so we aren't.
Okay. So now understand. Now everything else is related to machinery and this is goods for own use.
Hmm.
This will come in the cost of sales.
Huh.
Is there anything that you can think of
No,
in cash
nothing.
account? Cash
No.
account had an opening balance. It had a
Yeah.
closing balance. You had done cash sales. out of which you paid into the bank 7170. You had withdrawn drawings and you have 110 as what? Your closing balance.
Close down. Yeah.
So can you give me the wages paid?
Yeah, you have to balance the account.
Yeah, balance the account. What is the debit side total?
15,520.
And credit side total?
It's 12,680.
From that, if you minus, how much will you get?
2,840.
So what is the wages paid in cash?
2,840.
So wages paid in cash is 2840. Okay. Just remember this and keep it in mind. Now let's talk about depreciation. What is the situation for depreciation?
Yeah, so during the year, machinery that had cost $6,000 on 1st July 2019 was sold.
Okay, machinery costing 6,000 was sold
Hmm.
and machinery is depreciated at which method?
15% per annum using the reducing balancing method.
Again, what is the depreciation policy?
Reducing balance method.
Policy?
Reducing balancing method.
Policy. Full year
Oh,
depreciation.
a full year वैसा okay. A full year depreciation is charged in the year of purchase, but none in the year of disposal.
Okay, fine. Now let's talk about the machinery that we have. Okay,
Hmm.
machinery that we have is how much? 18,480.
Yeah.
Okay, and you have disposed of machinery. Selling price is 4,000.
Okay.
Machinery that you have is 18,480. You have disposed of machinery and you have bought a new machinery and the machine that you disposed is of 6,000. Are you with me?
The machine that but you bought, no?
You
अच्छा,
bought a
okay.
new machinery is 9,200.
हाँ, okay.
Full depreciation on this.
Okay.
Okay. You
Hmm.
sold a new machinery. If I'm making the machinery account at cost.
Hmm.
So you sold a new machinery. So what is the cost of that machinery?
6,000.
6,000. Lovely. So machinery account, if it is maintained at cost, how do you do? How do you make the account?
Now, so you'll balance it, right?
Hmm. So what is your balance close down?
18. The total is 27,680.
Sorry,
Total is 27,680.
27,680.
And the balance CD is 21,680.
21,680. So
Hmm.
cost of remaining machines.
Is
Cost of remaining
21,680.
machine is how much?
21,680.
680. Now find out the depreciation. Come on, let's make the provision for depreciation account. What is opening depreciation?
9,685.
Provision for depreciation account always has which balance?
Credit balance.
Which balance? Credit balance. Okay,
Credit
fine.
balance.
Now, I want to find depreciation of the current year. I want to find depreciation of the current year.
Hmm.
Okay. And I have to remove the depreciation of the asset that is disposed.
Hmm.
So can you find the accumulated depreciation of asset disposed?
Yeah.
How?
You'll have to do it for all the years.
Okay.
So 6,000 was the cost on 1st July 2019.
Okay, so 2019, 6,000 was the cost. We are in which year?
Yeah, in 2022.
We are in the year 2022. So this would be 1920, 2021, 21, 22. We've sold in this year, right?
Yeah, so 3 years ka depreciation you'll
2
remove.
years, no depreciation in the year of sales.
Yeah.
Okay. So 6,000 into what percentage?
15%. Should be
6,000
900.
into 15%, 900. Net book value,
5,100.
5,100. Depreciation,
765.
net book value,
4335.
so what is the accumulated depreciation of the asset disposed?
1665.
Sorry,
1665.
1665. So in your provision for depreciation account opening balance over here, accumulated depreciation of the asset disposed will come on the debit side.
It's fine, yeah.
So 1665 will come over here. Current year depreciation would come over here and the closing balance here. Are you with me?
Yeah.
Okay, fine. So now I have the cost of the remaining assets. I have accumulated depreciation of
Yeah.
remaining assets.
Yeah.
So the depreciation that was there at the beginning of the year minus the depreciation of the assets sold will give me the accumulated depreciation of remaining assets.
Oh, I didn't understand.
Okay, I want the accumulated depreciation of remaining assets.
Yeah.
So this is the accumulated depreciation of all assets
All assets.
minus the accumulated depreciation of your assets sold.
So minus 1665. So it'll be 8020.
8020 is the accumulated depreciation of your remaining assets. So you will get the written down value of which assets?
So assets that are remaining with us.
The assets that are remaining with you. What is it?
8020.
What is 8020?
The accumulated depreciation of the remaining assets.
The written down value of the remaining assets is cost minus depreciation. It is 13,660.
So cost you will take from the asset account that we just made, no?
Yeah, cost how will you get? Your opening asset account was 18,480. You purchased a new asset of 9,200 and you've sold the asset whose cost is 6,000. So you get cost of remaining assets. Just digest this fact. I'll give you 2-3 minutes.
Yeah.
You have to find depreciation of current year. So depreciation of current year is 25% of the written number, 15%.
15%. So it'll be 2049.
How much?
2049.
2049. So this 2049 will come in other expenses.
Yeah.
Okay. So what is the depreciation charge for your current year? So your
2049.
depreciation charge for your current year is 2049. Are you with me?
Yeah.
Okay. Now let's talk about whenever you are selling an asset, you always have to calculate what?
The profit or loss.
So whenever you are selling an asset, you always have to calculate the profit or loss on sale of asset. So asset was costing how much?
6,000.
Asset was costing 6,000. Its book value is how much?
4335.
4335. You sold it for how much?
4,000.
4,000. So you have loss on sale how much?
335.
335. So there is two things related to the asset that has to come in your income statement.
Yeah, loss on sale
So I
and the
have two things on the
depreciation.
asset that has to come in the income statement. So what
Hmm.
will come in the income statement?
Loss on sale of assets and the depreciation.
So I will write loss on sale. How much? You'll use the word sale or disposal.
Disposal.
So you use the word loss on disposal of assets. How much? 335. And
Yeah.
depreciation of assets sold.
Hmm.
Asset name is what? Machinery.
Yeah.
How much? 2049.
Hmm.
Are you with me?
Yeah.
Okay, fine. Do you have all your purchases with you?
Yeah.
What is it?
Is 82375.
Sorry,
82375.
375. 82375. Do you have the opening inventory with you?
Yeah.
21,400.
No, 23,600.
Sorry, opening inventory is 23,600.
Hmm.
Do you have closing inventory with you?
Yeah.
How much?
Closing inventory is 21,400.
21,400. Now I
Hmm.
will again scroll through the question and see what is there. Electricity. Electricity will be in other expenses.
Yeah.
So I will write electricity.
Hmm.
How much have I paid?
Electricity you paid 3680.
Okay. Plus and minus you've already decided for it.
Yeah.
Plus 380 minus 420. How much is it coming?
One check. It is 3640.
4640. Inventories, incorporated machineries, and rent.
Hmm.
So 12, first you will take from the bank account. How much is paid? 12
One
to 50.
12 to 50
You've already.
minus 1,100
Hmm.
plus 950.
So how much is it coming up to?
12,100.
All this is done.
Yeah.
Proceed to the receipt side. Everything done.
Hmm.
Payment side. Rent is done.
Yeah.
Wages.
Now wages will write what we calculated, right?
You've paid wages through bank. You
Huh.
have paid wages through cash.
Hmm. So both you have to write.
Hmm.
Will be 39080.
Cash wages, can you tell me how much?
Cash wages is 2840.
Total wages.
39,080.
Okay. Electricity done.
Yep.
General expenses.
We'll write 18.
18,590.
Hmm.
Okay. Now I want you to take some time, work towards this, and then I will.
Okay.
Now I see something that is called goods for own use.
Hmm.
Can you tell me what is the actual treatment for goods for own use?
You minus it from the purchases.
Okay. So goods for own use. Goods for own use is deducted from the purchases at what price?
Cost price.
Cost price. So goods for own use selling price is how much?
It is 350.
350. The markup was there 25%. So you will get cost price. Are you with me?
Yeah.
So if you deduct the markup from the selling price, you will get cost price.
Yeah.
Now markup is
On cost.
on cost. So this is 25 by 100 on.
Cost.
So this is 1/4 on.
Cost.
Do you
Total
have
cost.
the cost?
Yeah. The cost of sales, na?
Do you have?
No.
So it will be 1/5 on
Sales.
sales. So it will be 1/5 on
162, 130.
350.
Oh, like that.
70 is the profit on the goods for own use. So what is the cost of goods for own use?
It is 280.
So the cost for goods for own use is 208. So when I am making my income statement, mine is goods for own use. I will minus 280. So I will get my total cost of sales as how much? It will be
84,290.
84,870.
Hmm.
So sales minus cost of sales is 77,260. This is gross profit. There is no other income. The total of your expenses is 75,794. So you have profit for the year 1466. Please check the totals before proceeding with anything.
Yeah.
We forgot to read this additional information. There is an
Yeah.
additional information. Can you please read that additional information?
Yeah, inventory at 30th June 2022 included damaged goods, which had cost $1,800 but needed repairs costing $350. The goods could then be sold for 30% less than normal selling price of $2,250.
So closing inventory was how much?
21,400.
21,400.
Yeah.
This includes the damaged goods.
Yeah.
So I will remove the damaged goods and I will get my normal inventory.
Yeah.
So 1,800 you will remove. 21,400 minus 1,800. 19,600. This is my normal inventory.
Hmm.
And this is my damage inventory, which is 1,800.
Yeah.
Okay. 1,800 is the cost of damage inventory.
Hmm.
What is the NRV of damage inventory? The NRV of damage inventory is estimated selling price plus selling expenses, right?
Yeah.
Normal selling price is 2,250. So this can be sold for 30% less. Normal selling price is 2,250. So this can be sold for 30% less. So that means it can be sold at 70%.
Hmm.
Yes.
Yeah.
So the estimated selling price is how much? 1575, that is 2250 into 70%. Digest and tell me. Your damage inventory, which was costing 1800, could be sold for normal selling price less 30% if you did a repair expense of 350.
Okay.
Okay. So
Yeah.
your abnormal inventory, which had cost 1800, could be sold at 70% of 2250 if you did selling expenses of 350.
Yeah.
So the net realizable value is how much? Sorry, 1575 minus the estimated selling expenses.
Yes. 1575 minus 350.
So 1225.
1225.
1225. So your damage inventory will be valued at what price?
1225.
Your damage inventory will be valued at 1225.
19,600 plus 1225.
So it's coming up to how much?
2825.
Sorry?
20,820.
So your closing inventory will be how much?
20,825.
Your closing inventory is 20,825. This was the reason why you were not getting the same answer. Please always check the calculations, okay?
Yeah.
So this is your gross profit. We forgot to read that additional information. Okay,
Yeah.
please do it. I'll wait for you.
Yeah.
So can you give me two causes of depreciation of non-current assets?
Wear and tear
And
and technological change.
okay, wear and tear, obsolescence, technological changes, anything you can say. Okay. Give me a business. Can you read the question?
Yeah. A business explain with reference to an accounting concept in each case why a business should make a provision for depreciation of non-current asset. So over here, the concept can be prudence
Okay.
because it states that assets should not be overstated and even profit should not be overstated.
Assets should not be overstated and even profits should not be overstated. Okay.
Then
Read
there is
this.
a business should make an adjustment for damaged inventory.
Hmm.
This will also be prudence only, no?
Hmm.
Or you can say matching also.
No prudence.
Okay. I can use both के लिए same
Yeah. So prudence why?
because again you're supposed to account for the expenses that are made so that the profits are not overstated.
Expenses are made.
I
Current
mean,
assets is not overstated profit. So this you
yeah,
can change. Accounting concept for depreciation, what you can put?
matching.
What will you put in matching?
You'll say that the revenue should be matched with the expenses that are made, no?
Hmm. Revenue for the year is matched against the expense of the usage of non-current assets.
Okay.
Expense of usage of non-current asset in the same year.
Hmm.
Okay, any other question is there in this?
There's a 5 mark.
There's a 5 marker, I missed it out. Can you tell me what is that 5 marker question of?
Reese has been thinking of maintaining a full set of accounting records. Advise Reese whether
One
or
minute,
not he
okay,
should
she's
maintain
thinking of maintaining full
full
set of
set of
account.
accounting.
Okay,
So we're supposed to advise Reese whether or not she should do it or not.
what you have to advise?
Whether or not she should maintain full set of
So
accounting
what is
records.
the points that is for maintaining full set of accounting records?
So it will avoid errors and it will help find frauds and
It will avoid errors. It will help
errors,
monitor expenses
the
and income.
expenses.
It will help to control them.
Yeah.
What
But
is the
however, point में
disadvantages?
you'll write that it'll be expensive and time consuming to
Skills.
maintain. They may have to
Skills
hire
that
someone.
this is.
Yeah.
So what is your advice?
That she should maintain it because in the long run this will help her maintain her records and bas.
Okay, so with this we complete October November 2022 paper 23 question number 1 of incomplete records. Please
Hmm.
understand to do this chapter. You need to know control accounts very clearly. And there was also something that was related to depreciation. So if you
Hmm.
don't know depreciation, you have to go back to depreciation and come back and do this.
Yes.
Okay.
Hmm.